numericals and understand, and we are calculated the tax. We understood about taxation is calculated, what are the notes or what are the process we need to follow so that we correctly solve it. Let's move on to the next type of finance and application, that is cash flow from investment activities. Many times in business, we have alternate arrangements for our emergencies, or we try to allocate some funds or some reserves so that we can have an option if there is a loss or there is extra money, an alternative is available for the concerns. And that alternative is nothing but cash flow, which we have to generate from the investment activities. Investment is defined as a pool of large money kept in any form of investment assets for long term, which generates the periodic returns over the long duration. So, as per this, the investment is an avenue or source which is utilized for generating the income alternate to my regular trading activities. So, when we invest in long term assets or investment, they are termed as cash flow from investment activities. For example, I purchase a shop and rented it. I invest in a godown. I invested in a long-term loan where I given a loan and I'm getting periodic returns. So in all these cases, when the cash is coming in or out, I am not following accrual principles. What I'm following is how much cash is going in and how much cash is coming. For example, if the capital is added to my stock, then I cannot claim that capital is for 15 years. So suppose 15,000 capital is added. So I will divide 15,000 into each month or each year. When I say 15,000, it normally talks about this year I received the money 15,000. In fund flow, I can say that this money which I received 15,000 is on accrual basis. So one time investments. So accrual basis means receive or receivable, whichever is the first. But in cash flow, we value on the basis of cash coming in or cash is going out. So in that regards, here we find the investments or long-term expenses, they are being valued or being concerned in a different way. So as per cash flow, the investment is an purposeful expenditure which we have made for long-term future income generation. As per Accounting Standard 3, following type of activities are considered as investment. One, cash paid for acquiring the intangible or tangible assets. So it includes research and development, it includes patents, it includes copyrights, and so on. It includes cash received from sale of fixed asset, cash paid for shares, warrants, debts, or any other investment instruments in other organizations. So it also includes cash received by sale of shares or issue of shares or disposal of shares. If any cash is received as advance or repayment from long-term investment, it is also considered as part of cash flow. So, as per definition of cash flow, sale of assets, disposal of assets, repayment of loans, advance of loans, issue of shares, purchase of warrants, purchase of debt, all these things are being part of investment activity, and all these things are allowed as part of income and expenses in cash flow. So, how we calculate? We first find out the sale of fixed assets or sale of long-term investments, and from that we deduct the expenditure for sale. If we purchase any fixed asset or long-term assets, we'll again deduct because the cash is going out, and ultimately what we find is income from long term. For example, I have sold 5,000 shares which I'm invested in XYZ Limited. So I get 5,000 rupees. I have received the loan which is given to one company. Amount is 2,000. Then I have sold the fixed asset at 3,000. So total sale is a 10,000 amount. I have to deduct from this the purchases. Suppose I purchase the long-term investment and the value is 5,000. I purchase the fixed assets. Suppose the value is 2,000. And then 10,000 minus 7,000. 3,000 will be cash flow from investment activities. So this is where I represent the cash flow from investment activities. Just go through the slide. If in doubt, put in chat box or you can unmute. I'll wait for 1 minute. Let's move on to the further discussion. Let's take this example. We have following particulars and we require to calculate the cash flow from investment activity. We have purchased, sorry, machinery on 1st April 2011 is 80,000 and the closing balance is 90,000. The accumulated depreciation was 22,500 and at the end of period it is 37,500. During the year, machine costing 37,500 with depreciation of 21,000 was sold for 18,200. Find out the cash flow from investment activity. Anyone would like to try? I'll wait for some minute. So here I have opening balance 80,000. So if I make it a rough calculations, the machinery account opening balance is 80,000. The closing balance is 90,000. Then the opening depreciation. Now depreciation is negative. So depreciation always carried a credit balance. So it is 22,500 and its closing balance will be on debit side. So it is 37,500. Now this was about the machinery. If I calculate the balances here, it is something. And if I calculate on credit side, it will be, so the difference is 5,000 I have in machinery account. So this is a plain indicating the 5,000 rupees I have done. Now we have one more adjustment where the machine was costing 37,500, having depreciation was 21,000. So at the time I'm selling the machinery, what I need to do is 37,500, the original cost of machine minus depreciation, that is 21,000. The actual cost of machinery when I sold is 16,500. But I sell this machinery in 18,200. So I deduct 18,200. So I need to find the gain or loss. So my gain on sale will be approximately 1,700. So I have two transactions here. One, maintaining the regular machinery account, and second, find out profit or loss on machinery accounts. So when I do these two transactions, I can ultimately calculate profit or loss. So let's see the workings. So first we are calculating sale of machinery is 18,200 and how they calculated sale of machinery. We have opening balance of machinery which is sold. We have closing balance of machinery which is sold and they find out the cost. So let me just go to the machinery account which we work out. We have opening balance 80,000, closing balance 90,000. We have sold the machinery of 37,500 and whatever the balancing figure which is available is called purchase. So this is transaction number one. Then we have transaction number two, where the cost of machinery was 37,500, the depreciation was 21,000, and we sell it for 18,200. So the balancing figure that we have calculated is 1,700. So we have first transaction about machinery account and second transactions about machinery sold. And by this way, we can find out the cash flow from investment activity. So sale of machinery, we have got 18,200 less purchase of machinery. Now, how we calculate purchase? This is balancing figure. Now the question is, what about profit? Whether the profit is recorded? Yes, the profit is recorded, but it is adjusted in P&L. But since change in profit or loss, we are not concerned in cash flow. Our most important is how much money I received. So the two figures for us is purchase and second sale of 18,200. And same is replicated in cash flow. We have purchase that is 17,500 and we have income 18,200. So we have negative cash flow of 29,300 from investment activities. I'll again go through the numerical. Please read the numerical. Let me show you the working first. So we have opening balance 80,000. We sold the machinery of 37,500 and the balance available that is on debit side was balancing figure. If on debit side the balancing figure is there, we normally consider as purchase. So we have purchase of 47,500. Now we have second transaction about sale that is machinery of 37,500 having depreciation 21,000. We sold it at 18,200. So only we are regarded towards sale that is 18,200 and hence we have the cash flow of 29,300. Now my question is why we prepared accumulated depreciation account even though it has no effect on cash flow. The simple reason of same because even though it is not directly related, when we solving cash flow, we need to have understanding how the cash is coming in or cash is going out. And in same regards, we need to work out each and every options we are having. For examination purpose, please remember in detail how much you can explain, how much you can do the working. It is necessary. So let's move on to the next cash flow from financing activities. Now, when you talk about investment activities, they are more capital oriented. They talk about the trade, they talk about the flow, which is a long term. When you talk about the financing activities, we are more discussing about cash flow, which we incurred in a revenue form. For example, we pay for some revenue expenses, or because of some revenue, we get some income. These are called financing activities. But when these financing activities are extended for more than a revenue period of 12 months, they are called as long-term financing activities, and the cash flow from such activities is again considered as long-term finance activities. The best example which commonly seen is debentures, bonds, shares, fixed deposit, and so forth and so on. For saying we'll have the similar treatments. So let's illustrate with the example. Following is the information related to ABC Limited, and we have to calculate the cash flow from financing activities. The 2000 equity shares of N 10 rupees per share were issued at par. 8% preference shares of N, that is 10,000, were redeemed at premium of 10. Dividend is paid 200. So in this case, I have done the cash flow for investment purpose, and hence whatever the cash coming or going out, I just need to calculate and find out cash flow. Now first, I need to locate the source of income. So when I issue shares, I get the money. When I pay the dividend or redeem the shares, I am doing my payments. So 2000 shares at 10 rupees. So my income is 10,000. But 10,000 shares at premium of 10%. So 10,000 plus 1,000, it means I am paying the redemption at 11,000. Similarly, the dividend paid is again my expenses. So 20,000 was income and 13,000 was expenses. So 20,000 minus 13,000, I have 7,000 income from finance activities. Please read the numerical and read the solution. Any doubts you can put in chat box or we'll move forward. Now, many cases in balance sheet, it is given the cash or cash equivalents like cash at bank or cash in hand or short-term investment, and they are given opening balance and closing balance. In same time, we need to find out the difference. If the difference is positive, the cash is coming in. If the difference is negative, the cash has moved out. Let me give an example. Suppose opening balance, I'll take it here. Opening balance of cash in hand is 3,000. The closing balance is 4,600. Opening balance of cash in hand was 4,000, sorry, cash at bank 4,500, and closing balance is 3,800. The short-term investment, I have opening balance of 6,500, and the closing balance was 7,000. Now, in this case, we can observe the cash in hand was 3,000, and now the cash in hand is 4,600. It means the amount of 1,600 is received. Cash at bank was 4,700, but it turned to be 3,800. So it indicates that 4,500 minus 3,800. So 700 cash is applied. So it is a minus. So I'll write in brackets. In case of short-term investments, it was earlier 6,500. Now it is 7,000. Now in this case, when the short-term investment increase, it simply means I have invested more amount in short-term investment. So when the amount of closing balance increases, it indicates the money has flown out to purchase the short-term investment. When I was talking about cash in hand and cash at bank, I plain deduction was A minus B. So A is the closing balance and B is opening balance. But in investments, when we shift from 6,500 to 7,000 as investment value, it means 500 rupees we have spent to purchase more short-term investments. So when the value of investment increase, we should consider as expenses, not gain. So here I consider 500 rupees. So 700 plus 500, it become 1,200. And my income was 1,600. My expense was 1,200. So my income from the increase or decrease in cash equivalent is 400. Any doubt in this? If a doubt, I'll just wait for 2 seconds. Please put in chat box. I guess no doubts. So let's proceed. Let me show you the complete format of a cash flow statement. I suggest go through this format, read the every contents. I'll wait for few seconds. So if we talk about the format, it is exclusive. As per the question, the contents need to be changed because this is not the complete format. We have first cash flow from operating activities. In operating activities, we have net profit, then we have adjustment for depreciation, loss on fixed asset, gain on fixed asset, and so forth and so on. After that, we have operating profit before working capital, and we'll find out change in that, and it is added in cash flow. Then we have income tax paid and other expenses, which we so far discussed, is calculated. And then in the end, we have a cash flow statement. Now, as suggested yesterday, those who have carried out notebooks, please try to solve this numerical. I'll wait for a few seconds. Let me show you the adjustment part. So we have machinery of 50,000 sold. We have depreciation. We have interim dividend, and this is the numerical. So just go through the numericals. I'll wait for a few seconds. Now let's start working for the same. I hope the reading part is over and I do not waste the more time. We have the adjustment on machinery. We have to first understand the change in capital. So earlier the capital was 3,60,000. Now it is 4 lakh. So when the capital is increased, it means the money is received. Whatever the money I have, earlier it was 3,60,000 and now it becomes 4 lakhs. So we have inflow of cash. There is change in reserve and surplus. Earlier it was 80,000 and now 1 lakh. So it means I have deducted from profits 20,000 and shifted to the reserve and surplus. But as per the rules and process of cash flow, this is not allowed. So I have to add back this amount to the profits. The bank loan was 1 lakh and now the bank loan is 75,000. So it means the amount of 25,000 is paid, which was earlier pending with me. If you go to the creditors, it was 2 lakh 10,000 and now the creditors are 2 lakhs. It means the 10,000 amount of creditors are paid, whereas Earlier bills payable was zero and now bills payable are 5,000. So it indicates the 5,000 money is pending as liability. So I'm not concerned about the same. The proposed dividend, which was 45,000 in earlier year, now it is 60,000. In short, 15,000 amount is increase. This increase in proposed dividend, again, I need to adjust in profit because the provisions are not allowed. Then we have income tax payable 25,000 and 30,000. Whatever the income tax payable for the 2011, it is paid in 2012. But income tax of 30,000, which is of 2012, it is paid in 2013. So we'll not take this amount, we will only take 25,000. Coming to the asset side, we have machinery of 3 lakhs and 5 lakhs. So the machinery from 3 lakh, it is changed to 5 lakhs. It simply indicates the machine has increased from 3 lakh amount to 5 lakh. It means we have either purchase or sale of 2 lakh things in value of machinery. The goodwill was 80,000 and now it is 70,000. So the change in value of goodwill is adjusted in profit and loss account. The investments were 90,000 and now the investments are 1 lakh 10,000. So I invested 20,000 more in investments. So indirectly, I have done the application of money and this will be considered as cash flow. Coming further, the stock which was 2 lakhs, now it is 2 lakh 25,000, simply means the 25,000 stock is more purchased in the current financial year. The debtors were 2 lakhs and now the debtors has reduced to 1 lakh 90,000. It indicates the 10,000 debtors had paid their liability to the company. So as per this, the amount of 10,000 is received by the company. The bank balance was 1 lakh 30,000. Now it is 25,000. So this will indicate 1,500, sorry, 1 lakh 5,000 are withdrawn from bank. So this indicate a cash flow. Now once again, please read the numerical. Let's now move on to the working of numerical. Since we are solving on virtual, we have limitation of bold, so I cannot show the solution and question parallel. So what are the items like dividend, income tax payable, goodwill? I have the calculations. During the year, sorry, during the year, interim dividend was paid 25,000. So let's do the calculation of profit before taxation and extraordinary items. The reserve and surplus, which were 80,000 had changed to 1 lakh. So it is increased in reserve surplus by 20,000. The tax of 25,000 in 2011 we are paid in 2012, but we are creating provision of 2012 which is not allowed as cash flow and it is shown as expenses. So now we have to add it the provision for taxation. The proposed dividend is paid after the financial year, so the cash flow not happen. So we are also adding the same. The interim dividend, even though it is declared, it is never paid during the year. Let me explain the process of dividend. Sometimes companies find their profits are very upscaling and they have the excessive funds available to them. They can use or invest these funds for their gains. So for same regards, they declare the dividend for investors that this is interim dividend, you can have it. But as per the legal provisions of Financial Act and company laws, interim dividend is declared, but when you are paying, you require notification. So that declared dividend is not legally allowed till the end of financial year. So while calculating the profit before tax, I need to add back. So whatever the things, I need to adjust my profit by 1,35,000. So while solving numericals, I have first adjusted all the adjustments which are actually the provisions or legally they are not allowed into the profitabilities. Now I'll start understanding the same net profit before tax and ordinary items. So here they are given. During the year, we have interim dividend so far. And after calculation of all this adjustment, we find out the profit of 1,35,000. In this numerical, if they are given the net profit is 2 lakh, so 2 lakh plus 1,35,000, the profit may be 3,35,000. Or they are given loss of 2 lakhs and the profit is 1,35,000. Then in this case, the 2 lakh minus 1,35,000, that is 65,000, will be shown as loss. So the provisions or the division of interim or tax paid in advance, they are adjusted while calculating the profit before taxation and extraordinary in workings of cash flow statement. Now, this same profit were to show in operational activities as income from cash flow statement. The second, we have to adjust the depreciation, goodwill, and sale of machinery. Now, the depreciation is given in balance sheet 80,000 and 1,50,000. But here they are mentioned for the period it is 1 lakh. So we'll ignore the change and we'll only consider 1 lakh. The goodwill amount, which was 80,000, Now it becomes 70,000. So loss is 10,000. The loss is 10,000 and we're calculating here 10,000. Then where to find out the change between current assets and current liabilities. So if you see the balance sheet, we'll take the total of current assets. The current asset for first year minus current asset of second year. So we have the change. Like in first year, I have the amount of 5,30,000. I'll change the color for readability. Okay, I'll change the color so that it is clear. So first year I have 5,30,000 total. Second year, if I take a total, it is 2,25,000 plus 25, it becomes 250. 250 plus 1,90,000. So it becomes 4,40,000. So the first year and second year, I calculate the difference. Then I have the difference of something around 5,30,000 minus 4,40,000. So the difference here is 90,000. And this is minus 90,000. Why? Because the first year current asset was more and the second year current asset was less. Now, when you come to the liability side, we have creditors and bills payable. We'll take the total of first year, it is 3,10,000. The total of second year is 2,05,000. Now, there is a change that we have paid our liability, and that change is something around 1,05,000. So this change is decreased, but when it is decreased on credit side, we'll consider as a flow, and hence we are adjusted the same things here. And you can see the change of 15,000 is denoted, and ultimate 35,000 is my change in current assets and current liabilities. When you're solving the numericals offline for your examination, you need to prepare the statement showing changes in working capital separately. But since we are solving virtually, I'm using this. Then after that, we have to talk about the cash flow from non-operating activities, that is investment activities. So we have adjustment given in numerical that during the year, machinery of 50,000 was sold for 25,000. So we prepared the machinery account. So sale of machinery, the cost was Sorry for technical issue. Here we have find the cash flow is from operating activities is negative because we purchase the fixed asset. There is change in value of fixed asset to like 50,000. The machinery which was costing 50,000 was sold at 25,000, and investment has increased from 90,000 to 110,000. So cumulatively, the cash from investment activities is 2 lakh 45,000. Then we already discussed this thing about issue of capital and everybody. So we have 55,000 as cash from financing activity. Then we calculated the change here about bank because this change is cash in bank. The change was earlier it is 1 lakh 30,000, now it is 25,000. So simply it indicates 1 lakh 5,000, the bank balance has reduced. So this 1 lakh 5,000 reduction indicates the cash outflow. And here we have 1 lakh 30,000 less 25,000. Now these are the certain working notes which we need to do. For time being, I'm just showing to you. I'm not working on this same. So this was the numerical. Now hardly 3 minutes are left. So I'll just show the working notes. And after working notes, we'll close little early because I have to solve one more numerical. And what I suggest, all of you please come with the ready and notebook so that one numerical we can solve together and you can understand. The first working note we are done about machinery because machinery is sold. So the amount of machinery which is sold is 50,000. The depreciation was 30,000. So I'm getting 25,000. So if I make a total of credit side, it is 55,000. So I have 5,000 profit on sale. So this 5,000 profit I'm shifting to the profit and loss account. Similarly, when machinery is sold, the effect is given in machinery account. I have opening balance 3 lakhs and I have closing balance of 5 lakhs. So it indicates my total of credit side is 5 lakh 50,000, whereas total of debit side is hardly 3 lakhs. So the balancing figure is 2 lakh 50,000 and the same amount I have considered in numerical as purchase. And this amount may be wrong if I am not prepared the working notes. So this is all for today. In tomorrow's session, we are going to discuss about one more numerical and then we'll shift to fund flow. Sorry, then we'll shift to economic value added statement because if I take cash flow and fund flow one by one after other, it may lead to the confusion. And instead of that, I will do the session on economic value added statement and we'll discuss what is economic value statement and how it works. So now you can log out and join the next session in the evening. So if any doubt, I'll wait for 1 minute or we can close the meeting. Okay, I guess no doubts. So thank you for being part of meeting. We'll meet in the evening for evening sessions. Now you can log out and continue. your daily